Good day traders, this is the Daily Market Rundown live from the Tradelo Trading floor. It's October the 28th, some highlights from today's show. Oil gaps lower, BTC's got a weekly breakout, and the US 2-year note is a strong buy. Good day traders, let's get stuck in. It's quite a busy week ahead. We've got a number of macro events that we'll talk about in a brief moment. But let's take a look at some of the opening moves that we saw in Globex session. Of course, we had an attack from Iran over the weekend. We had an attack from Israel on Iran over the weekend. It was very much limited in the sense that it was targeting military only. And as a result of that, the market looked at that as a de-escalatory type attack. Of course, we did have Khamenei come out and tell us that they do reserve the right to respond how they feel is appropriate. But the market has taken this as though we are now at a bit of a stalemate where one side would either need to do something silly for it to begin the process of escalating again. That means, of course, that the risk premium now is very much out of the market. And when we have a look at that, if we're just going to move across and take a look at some of the charts. But before we get to that, what I do want to point out to is Khamenei told us that, the attack was very much limited. Okay, there was not a great deal of damage. And yet Israel's telling us the complete opposite. And if we just rewind the tapes back to April this year, it was something very, very similar, where in essence, both sides wanted to claim that they got the biggest slap in. And as a result of that, both sides acknowledged that they were the winners. And in essence, no, we don't even know who the winner was. Okay, the market's taken this as de-escalatory, and that's all we need to be aware of as traders. Now, if we turn our attention and talk a little bit about some of the things to focus on this week, we've got a number of things going on, and to start off with, of course, we're moving into month end now, and we do have a number of key macroeconomic events out this week, starting with, of course, we've got the US GDP Q3 print this week, and that will be very much front and center. Of course, there are some concerns around a recession in the US, so the market's going to pay very close attention to that. Straight after that, we've also got Microsoft earnings, and there is some concern about those earnings, and in particular, what those earnings mean for the market. Now, if we move across and go and look at some of the reports around that earnings, we are very much looking at a situation where Morgan Stanley's talking about the sort of wall of worry that Microsoft will need to rise above because of a combination of rising capital expenditure, margin compression, and a lack of evidence that we're getting any AI return. Now, why I've pointed this out is because you go back to Q2 where Google came out and said the exact same thing, spoke about heavy expenditure, no real returns in the near term. The market pretty much topped out at that point. And as a result of that, we had a very sort of neat AI correction. Now, don't forget, if we look at in particular the Mag 7 and the AI stocks, they have had a pretty strong run up in the last couple of weeks. Nvidia is trading just off of those record highs, so it could well be a case of we get a repeat of that Google sort of sell off where everyone looks at this as, oh, it's another Google, it's another big tech name that's heavily invested in AI, talking about sort of AI not really having any kind of returns in the near term. So keep a very close eye on that. I think that has got real potential to upset the markets, particularly in a week where the markets are thin. Okay, we'll talk a little bit about that in a moment, but just keep in mind the markets right now are very, very thin. There's not a great deal of interest to take any kind of upsized positions, particularly because we've got so many risk events this week, but we've also got, of course, the US election coming out next week. Now, let's turn our attention to some of the key charts. We'll start off with oil. It's gapped lower. Of course, this is quite unusual. If you're not someone that's been following the news, this would be very unusual to see oil gap down $4.5, $5 when we do have one country striking another country. The point is that everyone was well aware of this news. It's been around for some time that they were going to strike in a non-retaliatory way. But the reason the oil has gapped lower comes down to a lot of the hedges. Perhaps there was some hedging against a strike that would have had some sort of retaliation from Iran, but also perhaps a lot to do with where the market was trading. Okay, we've been talking a lot about this oil this year. We've spoken about how critical this 73 level was, how when we got back below there we had this gap sort of in the middle of October, how when we got back below there, we spoke about how bearish oil technically is. Okay, so a lot of that gap lower, I suspect, got less to do with some of the position scrambling, some of the hedge unwinds, but more to do with perhaps some of the just the general bearishness around oil. Okay, I think everyone's been waiting to be short of oil. They just wanted this risk event called Middle East escalation to be out of the way, and I think that's what we've got now. We've got a de-escalation in the Middle East, which now I think the technicals take over in oil. There's a lot of supply still, and we are technically quite bearish, as we have been all year. Okay, what is important now, if that gap holds today, that does send a very strong day 2 signal. I suspect we come in and test that 65 to 66, if not tomorrow, at some point very early on this week. Do we extend lower? Well, look, I think a gap tells us everything. A gap tells us that there's significant short side interest, significant bearish interest in this market to be short. So, if we get follow through tomorrow, do we break below the 65 to 66 at some point this week? Yes, perhaps. I think the probability is very high for that. Is it going to be an easy, straightforward breakout here? Perhaps not. Okay, this is one of those things about oil. It's been very much stuck in a sideways range all year, and I suspect it's going to be more of that. Sure, we can start to see these moving averages drift lower, but I'm not sure we're just going to drop straight down to $55, $60 a barrel in a straight line. Okay. Of course, we will be watching the volume very closely around that 65, 66 area. If it starts to pick up and we do start to see sort of one-time framing or price discovery mode, by all means, don't be afraid to join that trend. Like I said, there's no real support in this market below 65, but it all comes down to how intentional do traders want to be. Do they really want to get aggressively short oil, and what's the story behind driving that oil aggressively lower? Okay, we then turn our attention to Bitcoin. I think it's an interesting one. We've been talking about this for the last 2-3 weeks. We've been talking about the bullish structure. We've been talking about this going back up above these 72,000, 75,000 at some point in the next couple of days, weeks prior to the US election. Why? Well, Trump is pro Bitcoin, pro crypto. Does that mean he's going to buy it? No. But everyone wants to buy it before he becomes president. So we've got to join that story. We've got to trade with that sort of mindset. And just keep in mind, Bitcoin is something that's very, very heavily narrative driven. Okay, it's a far less, of course, technicals matter, but it's a far less technically driven and far more narrative driven. Okay, and the story's been pretty boring for a long period of time. You can see we've moved pretty much nowhere for the entire year. Now we've got a story. It's sexy. Trump is pro Bitcoin. Okay, we've now broken out of the 66 area. You can see the weekly chart looks very, very constructive. Okay, I appreciate this line is, I don't want to call it a trend line, but what it's showcasing to us is look at the number of times we've rejected at these higher prices. Last week, we did try and reject, but look where we closed. Okay, so we've closed above that 6,600. It's a chart that looks extremely constructive for a snap higher. Now, like I said, this is a thin market. You don't want to be short of it. No one wants to be selling it, and that's ultimately what creates the drive up. No one wants to be short. Everyone likes sexy Trump in power. He gets in power. We're going to snap higher until we find liquidity. Where it is, who knows? No one knows. Okay, sure. Is it a record high? I don't know. Is it at 100,000? I don't know. Nobody knows. The point is it'll go until it finds that liquidity. And typically speaking, a market like Bitcoin, no one wants to short it, so why provide liquidity to it? And that's what creates the upsize moves. That's why it does stupid things compared to more thick markets like S&P, Nasdaq. Okay, keep an eye on that. Good trading opportunity there. Now, our play of the day is in the US 2-year. We saw this in Europe. I think it's given us a very early indicator as to the 2-year trade for today. German bonds opened pretty much gap lower. They retraced the entire thing and they're trading pretty much at the high, or trading very close to the high of Friday's top end range. Okay, so we are currently right now sitting just below Friday's lows in the 2-year. We have tested that sort of swing low that we made on the non-farms at the early October. Don't be surprised to see that 2-year punch back in here and come and settle back inside that last week's range. Again, we've got a number of key macro events, so let's turn our attention and talk about some of those. Okay. This week, of course, it starts off with Microsoft and GDP Wednesday. We've then got the Fed's preferred inflation gauge PCE on Thursday. And whilst inflation's kind of secondary at the moment, the market will still give it some attention. We do have month end as well on Thursday, so there'll be a lot of index rebalancing taking place. And then we do have a budget out of the UK this week, which also creates a little bit of volatility in the gilt space if you are trading UK markets. And then finally, of course, we have got the non-farm payrolls on Friday. And that is a live Fed meeting. Okay, it's the equivalent of a rate meeting. however that number comes out, the market's going to move. The market really is not 100% certain what the Fed's next move is. Okay, there's a very high probability we are going to cut again in November, but the market right now is not even 100% sure it's a 25 basis point cut. Okay, so there is so much potential this week of opportunity, and what that means is we've got to be very, very sort of targeted in how we approach the market this week. There's going to be a lot of things going on. There's going to be a lot of illiquidity in the markets, a lot of crazy moves, and you just need to make sure that you're managing yourself according to that context. Okay. Of course, next week we have got election week. We'll talk a lot about that as we get into the latter half of this week. Otherwise, that's it for today. Good luck out there. Always manage that risk. Go make some money.